All right, welcome back to Liquid Lunch. It's me, Hugh. It's Andrews here. It's Thursday, and now we're joined by Marco-Simone, managing partner at Parker-Simone.
Good afternoon.
Good afternoon. And now you guys are an accounting firm. Do you want to just kind of give us a general...
the exciting profession of accounting?
Well, we were talking about how exciting it is now. You know, helicopters and parachuting, it's getting more exciting all the time.
I think it's what it allows you to do that's exciting.
I don't know. I see these commercials
career
on TV, and I am rethinking my career. Although I have to say, I did take accounting at university. I was in business.
And it chased you away. That's why you're doing this.
I tell you, I enrolled in the course, and I think I missed the first class, and it was really packed. And the teacher was, like, going really fast. And I still, even today, have trouble with the concepts of debit and credit. So I actually dropped out of that course about 2 weeks in and just decided I was going to go in a different direction than accounting.
And here you are.
Well, here I am, but
There
here you are. You stuck it out, and actually, it's interesting. But what was it? What was it that attracted you to accounting? And I know lots of accountants, and they're fantastic people. But what was it that, you know?
Do you want me to make up a story or tell you the truth?
Well, tell us the truth
What's
first, and then we'll do a second cut with a story of some sort.
Okay. I'm not the typical accountant. I didn't go into accounting for the typical reasons. I barely finished high school. I ended up taking time off after high school, did not go to university, worked in a factory for a while, worked at Labatt's in London, Ontario. That's my hometown.
That's a good factory to work in, right?
A lot of free beverages.
Really?
Well, when I worked there, they used to have a bar there. It was open 24 hours a day for the employees.
God.
And you could go there even
my
if you're
God.
on your shift?
Oh yeah, depending on which department you worked on, you either went on your coffee break or on your lunch, and everybody was allowed to go in after work.
Oh, I see.
So you finish work at midnight and go have free beer till 3 a.m. and then go home.
Did they offer counseling on the job as well?
That comes later.
The counseling was
Part of the
how to
pension
drink
plan.
beer quickly.
I'm surprised you wanted to leave that job.
Free beer only goes so far in your life.
Wow.
But I worked there for 3 or 4 years and decided I needed to do something else with my life. I didn't want to be there the rest of my life.
Yeah.
So I looked around on what I was good at, and I knew I was good at multiplying, adding, subtracting, and dividing. And I knew accounting had something to do with that. So that's why I chose accounting. I knew
Seriously,
nothing about
that
the
simple,
profession.
that matter of fact.
Yeah.
Wow.
Oh, also, and I used to see ads for CAs, and saw their income ranges that they were offering.
Yeah.
That attracted me as well.
Yeah.
Because you could buy a lot of beer with that. Just
That's
saying.
right.
Because now you have to
The
buy
premium
it.
beer.
It's not free anymore once you leave that dream job.
My understanding is that bars no longer exist.
Yeah.
Why?
Well, they could
Because the counseling fees were just through the roof.
probably. So, just curious, where did you go to school for accounting then?
I went to the University of Western Ontario for 2
Hometown.
years. Hometown, then spent a year at Queen's University. And I decided to move to the big city of Toronto to work.
You know, I'm going to ask you a weird question, just
Okay.
because I've often thought and been involved in discussions where people have raised the idea that maybe, because there are rules to accounting, like generally accepted accounting practices
principles.
or
Okay.
whatever you call it now.
Gap.
Yeah, GAP.
You remember that from your high school, university course?
University, yeah. See, but now I've learned everything's changed, so I'm,
Just a little bit.
could be wrong about that. But
Now it's gasp.
that comes later too. I'm just wondering if you, because you're in the field, do you think that the rules around accounting accurately reflect the financial position of a business? And I know that's what it's supposed to do, but some people talk about, how we deal with depreciation and that sort of thing. Do you think the rules are create an accounting framework that accurately reflects the financial position, healthiness of businesses?
Well, just to throw a little bit of a curve in there, like we no longer have GAAP. We have accounting standards. It's called ASPE, Accounting Standards for Private Enterprises, or we have International Financial Reporting Standards.
Okay.
The old ASPE, or the current ASPE, is very close to what we used to call GAAP.
Okay.
For private companies. And well, as the world gets more complex, from an accounting perspective, you have to deal with that complexity in financial reporting. And whenever you deal with more complexity, you always have to make certain judgments with respect to transactions.
Mm-hmm.
The vast majority of businesses out there, especially owner-managed businesses, they're not very complex transactions. It's fairly straightforward. The accounting policies that you follow are quite reflective of the financial operations of the business.
Mm-hmm.
Accuracy, as you call it. It's when you get into more complex transactions, you have to make more sophisticated judgments where there can be room for having slightly different answers depending on which judgments you apply.
Mm-hmm.
Okay, is it true that you can spin anything to look any way you want? I guess I shouldn't be asking you this.
Well, as an
should
old
I?
boss of mine used to say, was it, figures don't lie, liars figure.
Wow.
Wait, what?
So-
What was that?
Figures don't lie, liars figure. If someone wants to manipulate they can only get away with it for so long before it becomes obvious as to what's happening to someone else. And you look at all the great frauds that have happened, Enron, WorldCom, LiveNet, it all eventually gets caught up because you can only manipulate those numbers and hide something for so long until the numbers get bigger and bigger and you're
Now-
hiding a bigger and bigger problem.
Okay, let me ask you about this, and I don't even know if this is an issue, because it's been a long time since I've even thought about accounting at a theoretical level or whatever. But because didn't they in the old days used to, like, when they counted, say, a real estate asset,
Yep.
they would always just count it at the price that they bought it for,
Right, at cost.
at cost, right?
Yeah.
Is that still the way it is? Because in a way, if you just do that and the markets are escalating, the price of
Yep.
a real, then that would seem to me to be a distortion in that keeps getting bigger as time goes on.
Well, under ASPE, it's still fairly well at cost. Lower cost or
See, this is the kind of
net
thing.
realizable value.
This is the kind of thing I'm talking about.
In international standards,
Yeah.
you can, especially if you're in the business of managing real estate or owning and managing real estate, you don't have to follow the cost principle. You can value your real estate every year and record the increase or decrease in value
Yeah.
as the years progress. And the logic behind that is it's a management decision to hold on to the asset. And we all know that real estate in the long run goes up in value, so are they making the right decision and recognizing that income, and they call it appears in what they call the other comprehensive income line item,
Mm-hmm.
so that management's decision to hold the asset is reflected in the statements.
So how does that? I mean, what are the implications of having one system where that is where you're allowed to account for the increase in market value, and the other system where you have to hold on a cost basis?
Generally speaking, public companies have to follow international financial reporting standards. So there's, with the exception, and my experience is larger private Canadian companies, they will move from ASPE to international standards because they want to be more comparable to, say, their international competitors from a financial reporting perspective. So there is that dichotomy, but
Like
the notes in the financial statement explain the policy, so it's not like they're hiding anything.
because I understand, and we're just having a conversation here, but because a company, and I'm really not a big super accounting guy, but
You have 2 weeks of accounting, we've established that.
Yeah, actually less. But if you've got, I guess, the balance sheet where you show the value of a company, but it's based on the value of the cost price of the real estate, then
Right.
you're kind of undervaluing. And haven't there been cases in the past where someone walked in, they bought a company or they wanted to buy a company, and it turns out that the value of the company was higher just by liquidating the real estate than the value of the company as on paper as an intact company that actually produced something.
It can happen because there are different ways to value a company.
Yeah.
So there's you can value, there's probably 4 or 5 different ways to value a company. And one is to look at the operations, being the income statement, and saying what cash is that generating, and doing some sort of a cash flow and present valuing that number back.
Yeah.
And another way is to look at the balance sheet and say, okay, if I liquidate this, what do I get for it?
Mm-hmm.
And so that will usually come up with a different value than valuing the operations. Sometimes higher, sometimes lower.
Well, I guess today
Sometimes close to the same.
buyers and sellers, if they're doing their due diligence, would have to check all those different values.
And they do.
And they
Yeah,
do.
yeah.
Was there ever a time they didn't?
They probably always did some sort of due diligence, but
Yeah.
Because
Yeah.
everything's
if you
more
don't know
complex
what you're
now.
doing,
So
you might not, though, right? If you don't know what you're doing.
then you shouldn't be buying a business.
True. That's a good point. This is why I would not make a good CPA.
So,
But no, seriously, I think that it's a lot more exciting than you're letting us on. Because all this fraud stuff that you hear about, I mean, that's all really exciting stuff.
Okay. If you say so.
Well, truly, I mean, because your job is to make sure they're following the book, right? They're sticking to.
Right. Okay. We'll call it that way. Yeah.
So really, what people are doing is trying not to, but not getting caught. Is that right?
Very few people are like that.
Oh,
Most people are quite honest.
seriously?
Yeah. Most people are quite honest. Most people want to do the right thing.
Okay, I believe that,
Yeah.
especially in Canada. Do you have a lot of international clients?
We have, over the years, had a number of clients with international operations.
Okay.
Canadian companies with foreign subsidiaries.
Okay, so but like you said, then they follow international.
Right.
So does that make them? That still does not make them an international client, then, from your perspective? They're still a Canadian client.
They're still Canadian operating. The
Okay.
parent companies here, they'll have an operation in, say, Singapore or Mongolia or South America or Africa or something like that.
So
So there
how?
could be a Canadian company with international operations. How about we describe it that way?
Okay, so how familiar do you have to be in international stuff, because you are dealing with all those other companies too, right? And they will follow their own guidelines as well to some degree, yeah?
Yes. And so therefore, my job as the auditor, because usually when I'm going to these countries, I'm the auditor for the Canadian parent.
Okay.
I have to go and I have to go to the company. I have to meet the auditors there. I have to review their work in detail. I have to look for those differences between the local accounting policies that they're following and the Canadian policies. I have to look for the differences in Canadian audit standards versus the, say, Mongolian audit standards.
So what do you do when there's a conflict, a direct conflict? What do
Well,
you do?
then you have to number one, identify it, then you have to quantify it. And then it's a question of making sure that at the parent company level, you do a consolidation entry to convert it over to
Okay.
the Canadian company's standards.
So who decides all of these standards?
the Illuminati,
Canadian-
right?
Well, I mean,
Bunch of
really,
bureaucrats. Okay.
are these bureaucrats who also are CPAs and that
Yeah,
kind of thing as well?
that's right.
Okay.
Yeah.
Okay. Does it, when you have new things happening, like changing GAAP to ASPE, is it? What's it called?
Yes.
Okay.
Very good.
So when you do that, have you agreed with all the changes?
Me personally?
Yeah, like do most CPAs agree with the changes, or are you thinking, why would they do that?
Well, sometimes you scratch your head and wonder why they do it.
Okay.
But in Canada, there's the Chartered Professional Accountants of Canada, the oversight body for the Canadian profession, and they work with the International Financial Reporting Standards body to develop standards. There's a committee, an international committee that works on the standards, and they'll develop concepts. They'll develop, they'll call them exposure drafts, and then they ask for input from the profession.
Okay.
So I could, if
that's good.
if I don't like something, if I have the time and I want to read it, and I don't like it, I can write and comment on it and explain what I don't like about it, what I like about it, how they should change it.
Wow, okay. That's good.
So there is an input from firms. Most of the input, though, comes from the larger firms. They've got the time and the resources to have someone spend a few weeks analyzing something. I'd sooner be like taking care of my clients and learn about that.
Yeah. But mostly you would agree with the changes and things.
Some of them I don't agree with. Some of them, are usually for the better.
Okay.
Or have you ever seen any that came out that you just said really kind of
Makes sense.
I think it's silly.
You're silly or harmful even, or just not logical? Like,
Well, there's one standard that I don't agree with, but you have to follow it, companies, and that's in the International Financial Reporting Standards world. In particular, it has to do with stock-based compensation. A company issues options
yeah,
to their senior executives, directors.
Right.
You have to value those options.
up front.
And in a company, if you pick a large public company,
Yeah,
it's not a big issue.
Yeah.
You come up with a value that appears to be quite reasonable. In a small public company, there's about 5 or 6 variables that go into determining that stock-based compensation, and you use a formula called the Black-Scholes model. And the one factor in there that has the biggest impact on the value of the options is the standard deviation that you calculated, the standard deviation of the volatility of the share price over a period of time.
so a smaller company would
Hugely volatile shares.
right.
So it could be 5 cents one day, 25 cents, $1,
Wow.
3 cents. So there's big volatility to their stock price. And hence the volatility factor, which is a form of standard deviation, is a very large number.
Oh,
And it ends up resulting in a very large stock-based compensation expense that the client has to book.
yeah.
And you look at it and go, this doesn't make sense.
Would your
But you have to book it. You
what
don't have
would be a
choice.
better way of deciding that value?
Yeah.
Do you have an alternative suggestion?
I like the old way, not value it at all. Because in the small companies, there's very little value to those options.
Right.
The people know there's big volatility,
Yeah.
and usually they will hold on to those options till the very end.
Yeah.
And if the price is above the option, then they'll exercise it.
Right.
Last 5-6 years, hardly anybody has exercised options in these small companies because there's no value in them. But when they issue them, they have to book this expense,
Right.
and it's a large number. I've seen it be into 7 digits for a small company.
It's an expense.
Yeah.
To the business.
Yeah.
Well, that's good for tax purposes, isn't it?
It's not deductible for Canadian CAT tax.
Okay. Well, that's
The interesting thing is,
yes.
when they first brought out stock-based compensation,
Yeah.
the U.S. quickly adopted it and didn't fight it.
Yeah.
And it turned out that in the U.S., stock-based compensation is deductible for tax purposes. So it's a non-cash expense that they got to deduct.
Wow. So
In Canada, you can't deduct it.
so that would be maybe a new rule you would recommend to CRA.
Let them deduct it?
Yeah.
Why not? They add it to employment income when they option it.
So then
When
that
they
would be
exercise the option.
that would be okay then to have this large valuation. It would help
if
the
you're going to
companies
deduct,
out,
yeah.
right?
If you're getting a deduction, yeah.
Right. Okay, there's one. Okay, that's a good one. Hey, I wanted to ask you about just your sense of the health of companies, either in Canada or around the world these days. People are talking about, there's some people out there concerned about the economy, global economy, just in general. So I'm just your sense of it, looking at the books of these companies and being in the profession. Just what's your general sense? And I've heard things like companies are, in general, have very low debt or something like that, but which sounds good, right? So I'm just your general sense of the health of companies these
Well, most
days?
of my work is in the private company world.
Yeah.
So, and it really varies upon the industry. We've got some clients that are doing extremely well, quite profitable, growing, not a lot of debt on their balance sheet. And then there's other companies, say in the resource sector, or, that are struggling.
Well, right now.
Right now it's been going on since about '08.
Okay.
You mean natural
So good
resources, like
Yeah, mining companies.
Just
Mining
commodities
Mineral
in
exploration
general, right?
companies.
Yeah.
Yeah, companies exploring for gold, copper, iron ore, whatever it is. They're struggling big time, trying to find cash to pay their simple bills every day.
and
They can't raise money. If they can't raise money, investment bankers are struggling as well because they have all these contacts in the public company world that they can't raise money for, so they don't have any revenue.
Mm-hmm.
And so they're struggling. In Canada, I get these notifications from IROC, and it's something like close to 50% of investment bankers have closed down in the past few years in Canada. Just no business. It's
so the
tough.
companies that are doing well, what
Are-
kinds of companies are those?
Real estate,
Okay.
home builders, construction related.
So tried and true. That's like
Distribution. I have a client that's doing well. They're in the food related distribution business. So, just different ones. It just depends. Software companies.
Does real
if they
estate
got a good
ever
product.
not do well?
You don't
'Cause-
remember the late 80s and early 90s?
Why? What happened then? Can't remember that.
I remember a crash, but even the housing market, I guess. Well, in Toronto, it wasn't so bad though, right?
Oh, prices dropped like 30%.
But that's like everybody said that was a bubble, and it was just starting to.
And we're not in a bubble now?
Well,
No. This is no bubble.
We're in a bubble. But when are we? Okay, so it seems the bubble is the norm, and not being in the bubble is the exception.
And every time they start talking about we're into a new normal, we're in a bubble of some sort, whether it's an
Okay.
economic one or whatever.
Okay.
Just like the old when tech stocks were booming.
Oh, yeah.
In the early
That was
2000s.
good.
It was a new world they talked about.
Yeah.
And all of a sudden it crashed.
Yeah.
Because finally it caught up all those valuations.
I mean, think about that though. Now, if this is a bubble, which, I mean, everybody's talking about it. Even the government is trying to figure out how to kind of tame the markets a little bit. Because you talk about real estate is a good sector, and building
bubble gonna
is a good
burst?
sector. Well, those are both related,
Right.
right? They're both related to the value of real estate, right? Sometimes I think about that's maybe where only all the money is in those sectors, almost because manufacturing has really kind of taken
Almost
a big hit
non-existent.
in Canada and the U.S., right?
Yep.
So I mean, what do we do when the real estate bubble? Then what's going to happen? Where's the money going to be then? What? I'm just talking, but it concerns me because don't want to have a big problem down the road, or even today.
Well, when, just like back in the late 80s, early 90s when real estate crashed, cash was king. Those that were highly leveraged paid the price.
Right.
Those that weren't highly leveraged,
Yeah.
they were able to ride it out. It wasn't pretty for them, but they were able to ride it out.
Yeah.
So put your money under your mattress. Is that the moral of the story?
Don't have too much leverage is the story.
So when do you expect? I'm not obviously I don't think that you're God or can forecast, but do you think the real estate market is going to crash anytime soon?
If I could predict that, I'd be a billionaire.
Yeah, you know what gets me is I can't see what would be the factors that would cause it, because nobody wants to raise interest rates because the economy seems a little fragile, right?
Is it fragile?
I don't know. You tell me.
I walk around the stores, everybody's out having dinner, everybody's shopping, everybody's doing well.
No, well, okay. So, but are they
spending money.
in increasing debt though?
Yeah, with increasing.
I don't know. I don't.
I think that the debt levels are going up. People say the whole retail sector is being propped up by consumer debt rather than income, right?
I don't know.
I don't know.
don't follow that kind of statistics.
Yeah. Well, this is
I remember, 2012, I was in Spain, and it was the height of all the financial problems in Europe. Spain was supposed to be in the doghouse economically, on the verge of collapse.
Yeah.
I was there with a client, and your restaurants at night were packed.
Yeah. In other words, we
People
heard
were
it
in the
was a
stores
disaster,
shopping.
but over there life was normal and
Life was relatively
And
normal.
fine,
Real
right?
estate prices were crashing, but people
Yeah.
were out enjoying themselves and enjoying life.
yeah.
And talking to the locals, yeah, okay. A lot of people worked in a cash world at that point in time.
Yeah. Interesting.
Yeah.
Okay.
So
Okay, so I had some more questions, but I don't know if I can think of any right now. So the companies are generally, kind of situation normal. Some sectors are doing well, some
some
not
are doing
so.
terribly. Some
Yeah.
are doing mediocres.
Yeah. I was going to ask you about regulation or over-regulation, because sometimes I think that policymakers don't really understand, how difficult it is sometimes to run a business, right? Like it's the private sector that's kind of creating the wealth, and you start to over-regulate that, and of course it's the public sector that's regulating the private sector. And I don't know, do you have any comments about that, especially with regards to the accounting sector, and because that's part of the regulatory framework?
So, one quick question for you.
Yeah.
What's one of the main purposes of Parliament in Ottawa?
I would say
Income
to
tax.
kind
Real
of,
simple.
Income tax.
I would say to kind of manage the context within all of society moves forward, including the private sector.
They're mainly lawyers that go into politics,
Yeah,
This is true.
I noticed that.
and they measure their success on how many bills they pass in a session,
Right.
which means every bill is more regulation of some sort.
Yeah.
So in other words, we're heavily over-regulated.
We're heavily regulated. In some areas, we're probably over-regulated, but every time something happens on Bay Street or Wall Street, who gets blamed? The senior executives of companies. We have to regulate them more
Yeah.
because they don't know what they're doing. This is the story we always hear,
Right.
that they're crooked. So the politicians create all these more regulations
Yeah.
to try to regulate something, what they perceive as a big problem, which usually isn't a big problem. It's usually a few loose cannon as opposed to the whole sector.
Right. Well, true, for sure. And I was going to make the point, if this is the case and it gets more complicated all the time and ever more regulation, at some point that regulation framework is going to be strangle
Strangle?
Strangle the
gonna-
economy. Slow it down.
Yeah, it's going to make stuff bad. Right? I mean, talk about a crash at some point. But the other opposite point I was going to make was that when you had Reagan in and he was deregulating the financial sector, a lot of those regulations
sector.
had put in after the Depression for,
Right.
and then we had 2008 happen partly as a result, partly as a result of too much deregulation and,
Was it?
well,
Fannie Mae and Fannie Mac in the U.S. were quasi-government organizations.
right. But who came up with those? What were those bundled mortgage securities? Whatever those things were, I forget what they're called. But that was the real problem that hit the fan eventually, bad. And then the rating agencies, right? That were rating them bad. Who's?
And the auditors that were auditing them and giving a clean opinion on them.
Yeah. What happens? How do we prevent that kind of stuff from happening?
And
You'll
these
never
guys-
prevent it from happening.
Human nature,
Human nature.
always a problem.
Always trying to figure out a way around the rules. That's human
I
nature.
thought you said everybody wants to follow. You weren't serious.
There's a difference between out-and-out fraud and using the rules to your advantage.
Okay.
Okay?
Yeah.
Okay.
Yeah. There you go. Okay.
So that's called Canada and the U.S. No, I'm kidding.
No.
It's like when you file your personal tax return. You report your income. You make an RSP contribution. You're legitimately allowed to deduct that RSP contribution against your other income. You don't have to. You can say, no, I'm not going to deduct it. But you choose to deduct it. That's using the rules to your advantage.
Okay. Which really they only give to you to... It's really crazy. When you think about it, it's really crazy.
You know, I get your point. And if I can
please,
try to articulate it a little bit.
Yeah,
because it just seems to me like that whole taxation system or whatever is like it's a drag. And what I mean by that is like none of that is it's like a car. A car moves people somewhere.
Yep.
Right? But it also has to move the car somewhere. So if the metal is heavy, if everything in the car is really heavy, then your overall efficiency of the main point, which is getting a person from point A to point B, that's a drag,
burden,
right? And it's
right.
like the whole taxation infrastructure is a drag on productive enterprise.
Oh yeah, it seems like make work.
Because
Just
it is
make
well, it is
work.
make work, and the business people have to pay for it, right? They have to, you know.
And then that's usually trickles down to the customer or the consumer.
Well, it does, yeah,
Of course.
Right.
and everybody ends up paying for that. You know, it just seems like a big inefficiency somehow.
I don't think it has to be that complicated.
Almost the world is more complex. Transactions are more complex. So yeah, everything has to evolve to deal with it. It used to be
Or
very
we can
simple.
just simplify,
The first
go
Income
back
Tax
down.
Act was, probably about that thick.
And why can't we
Yeah.
just get back to that?
And now it's like this. And
But shouldn't we simplify somehow? Because that
Yeah.
whatever that burden of complexity and make work drag is, if that just keeps getting bigger and bigger and bigger, it will cause everything to crash eventually, right?
Aren't you going to buckle under the weight of regulation?
Yeah, and then
Right.
private enterprise gives up and says, "I'm not just." And then what? Then we're in like perestroika, right?
you won't be sitting here
I don't know where I'll be.
on a beach somewhere.
Just so we're just about out of time. Is there anything else you want to bring up?
Nothing in particular, no.
I have one more question then for you.
Okay.
Bitcoin. Any thoughts about that? Just for fun?
I had a client that tried to get into that business.
Not successful?
It's if a currency isn't backed by a government, then it's really not a very good currency to be following. It's too subjective as to its value,
Okay, that's an interesting perspective.
and with it you can hide transactions, which is why it's a big attraction. Is you can transact in the
isn't
world
that-
where the government can't track you.
Well, and isn't that the whole point, though? You kind of want to do something that's non-government overkill regulated.
Or avoid taxes, or not pay taxes.
Because we're
Well,
overtaxed.
No, even not.
Simple question: do you like your roads paved? Do you like your free medical care? Do you
You
like
know
your
what?
schools for
You
your
know
children?
what? I absolutely do, but that's not what I see happening. I see the roads not being paved and the guys having extra long lunches. That's what I see
And they sell 407 to
on the side of the
another
road
country,
that should be paved.
right?
That's what I see.
Yeah. Should we trust the government
But
or
I see
not?
your point.
And I think that gets down to that issue, really, right?
Yeah.
And
Yep.
and I
And how
think
competent are they?
well, yeah, exactly. And so that's a big issue. So, anyways, but that's maybe a subject of a different interview.
Yep.
Yeah. So this has been great, Marco. Actually, very enjoyable
Yeah, it
conversation.
has. It has.
Good to meet you guys.
Who knew that it would not be boring?
That's because we didn't talk about accounting.
That's true. That's a good point.
So, I mean, just people out there, like the website, I think we have it up there, parker-simone.com. But what kind of clients are you looking for maybe these days? Anybody watching this, what kind of people do you want to deal with?
People, the key to me is clients that trust us, that I trust them,
Yeah.
that we get along well with. That I always find that if you can develop a personal connection with someone, then they're going to be a great client. If they're always I'll get introduced to people, and a client will say, "You got to meet Joe," and you meet Joe or Martha or whatever the person is, and you can tell almost right away that you're going to click with their advisor or you're not. And usually, if you don't get that sense of call it camaraderie, friendship that you can develop,
or just chemistry,
whatever you want to call it,
yeah,
they're not going to be a client for very long.
Okay, so any kind of
we have clients that work out of their house, just one employee, to very large companies with international operations. So it's not. There's no magic as to size or anything like that.
So just any kind of company and
any industry,
any sector.
Yep.
Public
we do
or
it
private.
All. Yep.
Okay.
Numbers are numbers.
Really? I'm gonna have to go look that up after. But anyways, Marco, great to meet you and great
Likewise,
to do this. So thanks for coming in.
My pleasure.
Thank you.
Good to meet you.
Me too.
So I think we'll take a little break here on Liquid Lunch. That might be it. I don't know. It's Thursday. Kind of feels like a Friday, but we'll have another Friday tomorrow. So we're not too concerned about that.
Groundhog Day.
Yeah, is it? No, that's in February. Okay. All right. We'll see you next time, guys.